What's good, Wolfpack? Welcome back to another breakdown. Today we're talking about fair value versus unfair value pricing, aka why price reacts so strongly to certain zones and ignores others. Understanding this concept will help you spot where price should trade and where it's moving too fast or too efficiently. Let's get into it. All right, what is fair value? So fair value is the price where both buyers and sellers agree, okay? It's balanced, it's efficient. You'll see overlapping wicks, small candles, small movement, sideways, price. All right. This is where the algorithm is happy. Price is balanced. All right. Fair value is basically the market cruising at the speed limit. For example, if we look right, let me find right here. This is a good example. This was over an hour of just nothing but consolidation, right? So this is just market cruising along. And then when it finally breaks through, right about here, it starts going above the speed limit or below above because it starts moving faster. All right? So go back over here. What is unfair value? Unfair value is when price moves too fast, leaves gaps, creates imbalances, or becomes inefficient. All right. This is where the market did not deliver price properly. Examples of unfair value zones are imbalances or IFVGs, inefficient pushes, displacement legs, unmitigated order blocks. These are the zones price likes to come back to. What's up? All right. So unfair value is the market speeding, skipping steps, and eventually needing to come back and fix it. All right. So fair value versus unfair value and real price action. Here's how you spot the difference live. Fair value, candle overlapping, wicks tag both sides, no gaps, smooth balanced delivery. Unfair value, price jumps, gaps between wicks, strong displacement, no overlap. Price loves to correct unfair value and return to a fair value. For an example, it left, creating an IFVG, came up, displacement, and decided to come back down into the value. All right. So, why this is important and why does it matter? This is where people get confused. Price doesn't randomly pull back, it pulls back because it left unfairly priced zones behind. And their algorithm needs to rebalance those areas. That's why your retest setups work so well. That's literally price returning to fair value. Fair value is home base. Unfair value is the playground. Price always comes back home. Always. So, every time you see an IFVG, that's unfair value. The imbalance is price moving too quickly, and when price returns to an IFVG and balances it, that's fair value becoming reestablished. The return is what gives us mitigation, retest, entries, and the continuation move. Okay? So check this out. Here's the fair value. Here's consolidation. Fair value. Consolidation. All right? Price shoots up with displacement. Displacement, let me see. So displacement right here, these two candles. All right? Unfair value created, which is right here. Price returning to rebalance this. And once the fair value is restored, the next move continues. Watch. You see that? The real move continued. So that's why fair value versus unfair value pricing, one of the easiest ways to understand why price pulls back, why certain zone matters more than others. Tomorrow, we're going to move on to premium versus discount pricing, which is another concept that helps you understand whether you're buying high or buying low in the bigger picture. Please drop a subscribe, a like, and I'll see you in day 13. Thank you so much, and I hope you all have a great and wonderful night.